How to calculate intrinsic value of a stock. What is a stock worth? You could simply go with the current stock price. But that price is subject to the market's whims. Another alternative is to determine the stock's intrinsic value. The intrinsic value of a stock is its true value. It refers to what a stock, or any asset, for that matter, is actually worth, even if some investors think it's worth a lot more or less than that amount. You might think calculating intrinsic value would be difficult. That's not the case, though. Not only can you determine the intrinsic value of a stock, but you can also use it to search for the best bargains in the market. Knowing an investment's intrinsic value is useful, especially if you're a value investor with the goal of buying stocks or other investments at a discount. Intrinsic value of stocks. Discounted cash flow analysis. Some economists think that discounted cash flow (DCF) analysis is the best way to calculate the intrinsic value of a stock. To perform a DCF analysis, you'll need to follow 3 steps. Estimate all of a company's future cash flows. Calculate the present value of each of these future cash flows. Sum up the present values to obtain the intrinsic value of the stock. The first step is the toughest, by far. Estimating a company's future cash flows requires you to combine the skills of Warren Buffett and Nostradamus. You'll probably need to delve into the financial statements of the business. Unsurprisingly, previous cash flow statements would be a good place to start. You'll also need to gain a decent understanding of the company's growth prospects to make educated guesses about how cash flows could change in the future. Here's the formula you can use to calculate an intrinsic value using discounted cash flow analysis. Intrinsic value equals CF1, 1 plus R1 plus, CF2, 1 plus R2 plus, CF3, 1 plus R3 plus CFN, 1 plus Rn. CF1 is cash flow in year 1, CF2 is cash flow in year 2, etc. R is the rate of return you could get by investing money elsewhere. Let's say you want to perform a discounted cash flow analysis for the stock of Robo Basketball, a fictional company that makes a remote-controlled drone that looks like a basketball, ticker Dunk. You look at its current cash flow statement and see that it generated cash flow of $100 million over the last 12 months. Based on the company's growth prospects, you estimate that Robo Basketball's cash flow will grow by 5% annually. If you use a rate of return of 4%, the intrinsic value of Robo Basketball would be a little over $2.8 billion using discounted cash flows going out for 25 years. Analysis based on a financial metric. A quick and easy way of determining the intrinsic value of a stock is to use a financial metric such as the price-to-earnings (PE) ratio. Here's the formula for this approach using the PE ratio of a stock. Intrinsic value equals earnings per share (EPS) x 1 plus R x PE ratio, where R equals the expected earnings growth rate. Let's say that Robo Basketball generated earnings per share of $3.30 over the last 12 months. Assume that the company will be able to grow its earnings by around 12.5% over the next 5 years. Finally, let's suppose the stock currently has a PE multiple of 35. Using these figures, Robo Basketball's intrinsic value is $3.30 per share, x 1 plus 0.125, x 35.5 equals $131.79 per share. Asset-based valuation. The simplest way of calculating the intrinsic value of a stock is to use an asset-based valuation. The formula for this calculation is straightforward. Intrinsic value equals sum of a company's assets, both tangible and intangible, sum of a company's liabilities. Calculating the intrinsic value of options. There's a rock-solid way of calculating the intrinsic value of stock options that doesn't require any guesswork. Here's the formula you'll need to use. Intrinsic value equals stock price option strike price, x, number of options. Suppose a given stock trades for $35 per share. You own 4 call options that entitle you to buy 100 shares per call option for $30. What's the intrinsic value of your options? The calculation is simple. $35-$30 x 400 equals $2,000.